Welcome to Behavioral Health Today, a podcast brought to you by the Triad Network. This podcast is designed to share trending topics occurring within the world and our communities and bring them a behavioral and mental health perspective.
Welcome to Behavioral Health Today. I'm your host, Sharlee Dixon, and joining me is Peter Fanger. Hey, Peter.
Hey, Sharlee. I'm excited for a talk today.
I am too. Welcome to BHT Bytes, where we break down trending topics into quick, relaxed, and relevant conversations. So today, we're tackling an issue that touches every single American: housing. We often talk about real estate in terms of interest rate, market inventory, and square footage, but housing isn't just a line item on a budget sheet. It's a fundamental pillar of psychological safety and community well-being. Right now, the state of housing in America is putting unprecedented strain on individuals and families. Between supply deficits, skyrocketing costs, and a grueling home buying process, the mental health burden of simply trying to keep a roof over your head has never been higher. The media often refers to a housing crisis, and I wasn't so sure that I really believed in that, but looking over the latest numbers from the Census Bureau, the Federal Reserve, and the U.S. Chamber of Commerce, crisis really isn't an exaggeration. There's kind of a lot to untangle here. So let's get started. To get the best understanding of what we're dealing with, let's discuss things from a macro level first, then really look at the American housing deficit. At its core, America is facing a massive structural imbalance. The U.S. Chamber of Commerce highlights a persistent supply and demand gap with a staggering national deficit of over 4.7 million homes. So really, there are 4.7 million individuals and families that are looking for a house, somewhere to live, that don't have one. So this shortage didn't happen overnight. It's rooted in over a decade of underbuilding following the Great Recession, which collided head-on with millions of millennials hitting their prime home buying years. Add in high material costs, strict local zoning laws, regulatory permitting delays, and these recent tariff issues, builders simply haven't been able to keep up. On top of that, costs continue to rise again due to those tariffs that have been enacted by the current administration. Because supply is so constrained, national home values have surged. The average U.S. home value hit over $350,000 this year, up nearly 33% over the last 5 years and almost double over the past decade. On the rental side of things, average monthly rents post-pandemic reached record highs. When rent climbs year after year without added amenities or equity, tenants feel trapped in a financial pressure cooker. We're also seeing this massive migration shift of people and businesses out of the Northeast and West Coast into the South. Specifically, California lost a significant population and nearly 500 businesses in recent years, while the South gained almost 900 firms and is currently touting daily population gains in the hundreds to low thousands per day. I've really encountered this living in the Carolinas because I've talked to and met so many people that have moved here from New York and other northeastern states because they're escaping the astronomical cost of living, up north or on the West Coast. So, Peter, my question for you is, I wonder what your thoughts are on someone who does live and has lived on the West Coast, and now you're living in a more northern state. Do you think that moving to a high growth area actually solves the housing stress for families? Or are people just importing affordability crisis into a new community?
Yeah, it's a really interesting question. I am actually one of those Californians that moved out of state into a more affordable area. I'm here in Ohio.
Yeah.
And so being able to experience that is great, but I'm also one of many others that have relocated. I know my sister lives in Montana and has complained about how their cost of living has rose because of West Coasters relocating to that state. It was very affordable, so people had moved over, and then now the cost of living has kind of increased because of that,
Absolutely.
right?
Absolutely.
The prices of everything have sort of increased. So I think that the sort of migration has kind of shifted, and the inflation rates have also rose. So not only are we seeing maybe more demand for certain areas that are welcoming more population,
Hmm.
but we're also seeing sort of inflation on top of that. And so I
Right.
think that that really kind of goes into a really messy situation where you're seeing sort of a boom in
Hmm.
in population in certain areas, but then also that cost of living for those that have lived there are also rising with it.
I completely agree with you. Living in the South myself, many years ago, it was very affordable, and cost of living here, North and South Carolina, was really, it was really, really good in comparison. But as more and more people move to the area, we're seeing that boom of not just the cost of living increases, but then people are now having to move further away from those city type areas to be able to find affordable places to live. So then on top of that, you've got this like behavioral health thing going on because you have to drive further away. You've got larger commutes and you're spending less time with your family. So it doesn't, it almost like, yes, I moved to this area for a lower cost of living, but then I'm having to drive further and kind of missing what I moved for. You miss that time with your family, you're in your car.
Right. Sure. Yeah. The commute kind of adds up. But then also, we also saw some changes like with COVID
Hmm.
and how working from home also changed where people needed to live.
Good
It
point.
really became from I need to be close to my job to I just need an internet connection.
Sure.
And so I think that that also changed. And then you now put in the pressures of return to office
Hmm.
situations. And now there's increased traffic, people who might have relocated before now having to travel longer distances. So it's like another one of those weird transition periods
Right.
for housing.
Right, right. You brought up a good point because I hadn't even really thought about it, about how things change with working from home. Many,
Mhm.
many people who didn't, had to go in the office before, then having to just be at home. Lots of places are bringing people back into the building, but maybe I moved further out so that I could enjoy a lower cost of living. But now I'm going to need to go back into office. So
Right.
it's a lot of different pieces here trying to fit together, and all of them seem to have something that's
Right.
causing some
Right.
trouble for us.
Right. Didn't we just talk to a practitioner who had their practice in North Carolina, then relocated to New Hampshire, and then
Mhm.
would make that commute each
Yes,
day?
yes, he did, which
I
when he
mean,
said
and
it,
then
I
it
was like,
also
"You did
just
what?"
ended up promoting telehealth.
Right. Right, because at that point, it's you're wasting your time in your car, and you think about all of the things that you could be doing at that moment. I will even
Right.
say for myself,
Right.
we moved to a larger city, but we are in the suburbs, and now I have a commute that I did not have before. And so I find myself being able to do less for myself because that, hour and a half every day, I'm in my car instead of doing something else that was,
Right.
felt more productive.
Right. Yeah. And I don't know about if this is happening with your area, but here in Ohio, there are major corporations that found property management being very lucrative.
Mhm.
And so here in Columbus,
Mhm.
Nationwide is like our big corporate insurance. And they ended up buying like a lot of homes. So when people
Mm.
started to foreclose on their homes thanks to COVID, they ended up buying like a lot of property in that area. And so we saw the rise in popularity of Airbnb and
Mhm.
Verbo.
Mhm.
We see some of these larger corporations also getting into property. I think that too puts a strain on the housing market.
It definitely does. When we first moved to the area, we rented, or leased a home from a one of those larger, and they're a nationwide company.
Right.
And the more I started to look around, they owned so many houses just in the one neighborhood that I lived in. And so it puts this huge strain on what people are able to do, and the cost of things, because if you got these larger corporations driving the prices, then everybody else is going to either compete with that or maybe be even higher for those same homes to rent.
Right. Yeah, it creates a different market. And
Hmm.
also, those larger corporations have more cash. And
Yes.
so you started to see the trend of people paying for homes with a down payment all in cash.
Yes, yes. And so then you're also, even if, let's say, we make it to the point of we want to purchase a home, you might be in competition with one of these larger companies and really not be in much competition because they can say, here's the, I don't know, $400,000 for this house. I've got it all. And they're
Right.
like, somebody selling their house is going to go for that. versus somebody who needs down payment assistance or closing costs or something.
Right.
So it definitely changes the way, or has changed the way, that real estate, and not just purchase of a home, but rent of a home as well. Because I know when I look on Zillow, and I have a problem because I just look at houses for no reason. When I look up Zillow, the things that are for rent in the area, especially the one that I live in, they are all managed by a large corporation,
Right.
not necessarily anything by just a person who is, trying to use real estate as their, maybe side business or something like that.
Right, right. So it creates this sort of unique pot where
Hmm.
you have a lot of innovation of what people are doing with those properties, who's
Yeah.
buying it,
Yeah.
and then a lot of migration trying to find more affordable housing, and
Right.
all creating a much more competitive environment.
Absolutely, absolutely. And we spoke a lot, or just now we were discussing how things can change, as far as when, a larger corporation they may have that expendable cash or capital to be able to just buy homes. But for us regular people, we need to get a bank loan, or some type of loan from a company. And so then you need to start looking at interest rates, right? So with the current 30-year mortgage rates, they're on traditional loans, they're hovering close to 7%. That is a lot when you are having to pay something over a 30-year time span. And it really puts into perspective, because compared to historic 3% lows we saw just 5 years ago. So just 5 years ago, you were spending half the amount each month in interest, that you're going to have to pay on your house. So again, that financial climate is impacting current owners, hopeful buyers, and policy making decisions. And at first I was asking myself, well, how does it impact current homeowners? What difference does it make for them? But it really creates this psychological and economic phenomenon called the lock-in effect. And I think
Mhm.
I actually might have been a part of that and didn't know what was happening. But about 80% of millennial homeowners currently hold mortgage rates well below 5%. So moving today means they forfeit 3 or 4% interest rates for almost 7, on a vastly higher purchase price. So maybe you do sell your house and you get a lot more money than what you paid for it, of course, but then you're going to have to spend more on a higher priced house with double the amount of interest.
Right.
So many existing homeowners aren't selling homes. They aren't doing anything with them. They're not even renting them because they're not going to be able to afford to buy something new. Over half of baby boomers who own their homes are now mortgage free. So they have zero incentive to sell as well. So you got all this compounding on top of each other. Existing home inventory remains pretty much frozen, where it's kind of at that standstill. But that again goes back to that deficit of over 4.7 million homes that people are trying to buy or move into to rent or whatever, and they can't because people are not moving.
Right.
This inequality hits younger adults and first time home buyers the hardest, because again, you've got 80% of people, they've secured that, below 5% interest rate. Only half of Gen Z borrowers have benefited from those low figures. And I'll talk about my personal experience with that, a little later in the show. But when we moved here, we had a 3% interest, right? Let that 3% go. And we felt kind of crazy because we're leaving this behind. And we chose to rent for far longer than we had planned to, because who wants, at that point, it was 8%. Who wants to pay 8% when you used to pay 3, knowing that you used to pay 3, right?
Right.
So, to address this, Congress did pass the 21st Century Road to Housing Act, really just a few months ago, actually a month or so ago, in July of 2026. It consolidates bipartisan reforms aimed at cutting regulatory red tape, streamlining federal permitting, expanding manufactured and modular housing options, supporting community banks, and incentivizing local zoning reform. So, I want to talk about the act in just a minute, but when we talk about 80% of millennials having locked in low rates to barely half of what Gen Z has, what does that mean long term? Are we witnessing this permanent generational wealth division based purely on when somebody got old enough or thought that they should buy a home? You get 30 years old and you want to buy a home. So now we're at this point where generationally, people just aren't buying homes because they can't afford it. And so you've got older people who were able to afford it, and us that were or are not, we just aren't able to build that generational wealth. What are your thoughts about that?
I think that it's a very challenging position to put anybody who's trying to buy a home now. I think, with time, you're able to see where things were at. Now, when you're talking about like the 3% interest rate, was that an effect of the recession from 2008?
Yes, it was.
Okay, right. Things were increasing. We had the recession, things sort of crashed.
Mhm.
They stayed low. That was the opportunity to buy.
Yeah.
And now what you're seeing is that people are buying homes. The interest rates are increasing.
Mhm.
The rate of purchasing homes hasn't slowed down. So banks can continue to offer that high
Mhm.
interest rate without any worry of the market, slowing down in that
Mhm.
way, right? And in my research, I thought it was very interesting because I'm sitting here and I'm like, wow, it's difficult because there's a bunch of folks from the boomer generation sitting on really cheap housing that they were able
Yep.
to purchase, and that's not necessarily true. Really, what I found out is that in the 80s, when you're buying a home, the interest rates were still pretty high, right?
Yeah, they
Talking
were.
about double
Mhm.
double digit interest
Mhm.
rates, but the cost of a house was not worth as much. So
Right.
right now, what you have is sort of like an imbalance of expensive housing with high interest rate. It just
Mhm.
creates a window of time in which it's not great to buy a home.
Right, right, and you bring up a really good point that you're absolutely correct that, in the 80s, early 90s, maybe even early 2000s,
Right.
interest rates were not this low. They weren't even as low as what we consider high now. They were not even that low, but house prices were much lower and they stayed at a steady rate for quite some time. And so now we've got both that are higher on higher ends and not just a small amount higher, maybe even double the amount that houses were valued at, maybe
Right.
just 4 or 5 years ago. Because again, all of that changed during, I think here recently, maybe COVID is when
Right.
house values started to increase.
Right.
And honestly, I guess I always looked at homeownership as something that it was like a vehicle for wealth building, right? For middle class people to, that's your American dream is to own your piece of American, I don't know, land, soil, whatever. You buy your house, you buy your first house in the suburbs, and you send your kid to the good school with the white picket fence and all the other stuff. And it just seems like these days that an entire younger generation is kind of priced out of that.
Yeah. Well, and then I kind of thought about this a little bit more because I think that norms are changing, right? We
Mm-hmm.
have
That's
a
true.
generation of young adults that no longer have the same opportunities to graduate college and buy a home or rent a house. They
Yeah,
move back home with their
true.
families and then from there build their careers, right? So
Yeah.
I don't think it's uncommon for families to want to have, say, a larger home or looking
Hmm.
for a larger home because they have to live there, right? You have to find
Yeah.
find space. But the other point I wanted to make is just like the 2008 recession, I think what you're seeing now, especially with that gap, is that it will also cause financial trauma.
Hmm.
And if
Yes.
you are growing up in Gen Z and this is the market that you're seeing, how do you reshape those beliefs of home buying
Mhm.
to where you're comfortable to, enter that market, right?
Yeah. 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 And you bring up multiple good points there because I don't as a young person, when I was a younger person, let me fix that. When I was a younger person, I would have never thought to graduate college and move back to my parents' house. Didn't
Right.
actually do it. Did not, would not have. None of my friends did. None of them. Okay, maybe one, but the vast majority of us, found a job, started careers, rented homes, maybe a few even bought houses and kind of moved on. And I am seeing in the younger generation, 20-year-olds these days are moving back with their parents. And so
Right.
it kind of brings something up to me. So is the American dream then changing? Does it look like something different?
You know what? I think it comes down to what I had seen in my research as emotional milestones.
Hmm.
So we have this idea that like home ownership is a realistic marker, right?
Yeah.
And that if you don't have a home, you feel adrift of, if you're hitting those points. I think it's reframing that renting isn't failure and
I
that
agree.
this system still kind of treats it that way.
Yes. Yes. I completely agree with you because it wasn't and I think that's an age thing because I know for
Hmm.
me, in my 40s, I'm like, gosh, I should own a house, right? Like that's what they always
Yeah.
told us we should do. We should own this house. And there are great benefits to owning a home, equity, and all that other stuff, but there are also benefits to not. And I do think people these days are starting to use a more realistic view of just that. Like
Yeah.
there are so many benefits to not having the burden because at times owning a home is a burden. It can be.
Yeah.
And so not having that as a burden to what life can look like. Some of that I do think is maybe COVID. I do think we all changed, whether we got sick or not, whether we lost people or not, whether our job situation changed or not. I do think, especially for young people, it really changed how they saw the world and how they saw moving away from their families or how much things cost or really the need to even be outside because a lot of I've got some 18 and 19-year-old goddaughters who are like, "Yeah, it's okay for me to hang out at home." I would have never. You know what I mean? And so it really did kind of change how we look at, those emotional milestones and markers, things that I and my generation may have thought like we must do this. These days, kids are not, or younger folks just aren't seeing it in that exact way anymore.
Sure. Yeah. And I also kind of think about like if we grow up in this environment where home ownership isn't as valued as it once was, or just
Mhm.
isn't obtainable, does the focus from maybe regulatory laws around home ownership switch to rent control?
Mm. Good point. And I honestly think that it should. It should contain something because I mean some people are still gonna want to buy homes. So it's got I think control both areas. Some level of rent control for folks that want to stay renting. There are so many benefits to either situation, whichever one you choose. And so I do think policies need to be geared to more towards that and not necessarily towards what historically has been the right thing to do. At a certain age, you must do this because I
Yeah.
don't think those norms are really the norms anymore. They
Sure.
don't exist. Yeah.
I'm also kind of curious, as we sort of talk about the situation, if there is maybe a correlation between domestic issues and some of the issues that we've highlighted, right? You're talking about, home ownership, right? You're talking about increasing of house insurance. You're
Hmm.
talking about new environmental disasters hitting the United States in ways that we haven't seen before.
Sure.
And all of those things kind of go into the security and safety of owning a home. And if you're feeling stressed from that and the entire family is feeling it, do we see some of those things sort of ripple out in other ways?
Right. I mean, I definitely think that they do because I don't, even if you don't have conversations with children about what you're dealing with, they're perceptive. They understand what's happening. They can feel tension, whether your family is able to afford things or not, or that maybe purse strings are being tightened a bit and can't go and do what we could do before, or you know certain things can't happen inside of a house because there's now that is a big difference. You can the house you own, you paint, knock out walls if you feel like it. But in a rental, maybe you move from a owning a home to one that you rent. There are certain things that you aren't going to be able to do. So I do think that it can take an emotional toll, some level of trauma on everybody involved in the process, whether you're directly involved or not, especially when we're talking about a migration thing, right? So let's say we have to move to be able to afford where we live. That changes, just moving an hour away can change, how a family continues to grow or not.
Right.
You know, we were discussing policy changes and I mentioned the 21st Century Road to Housing Act. It was interesting to me because it does focus heavily on like supply side streamlining things and modular housing. Realistically, though, how long does this kind of stuff take? I mean, I feel like it probably takes years, but how long does it really take to translate into lower prices or more physical things that people can see and anticipate in not just the sale of homes, but then also do you think that if prices of homes to be sold, if it impacts prices on homes to rent or apartments or whatever, like do they correlate in that way?
Yeah. Sorry, Charlie. I'm not going to provide a good answer. That's a really good question to pontificate on. Yeah, sorry, I really don't have
No,
a
you're fine, you're
strong
fine.
answer on that one.
No, you're good. Cause I mean, it really, and honestly, that's not the end of that was something that I just thought of as we were talking about it, because I know that policy takes forever, right? Like, yes,
Right.
you can say today we've signed this into law, but that does not mean that house prices are going to decrease today. Okay.
Yeah.
It's going to take a while. Building
Yeah.
houses, changing laws, locally are also going to take quite a while. And so I'm
Yeah.
curious about that.
Yeah, I mean, I do think that it's a good question. I think for the most part, we see it with how people vote with their dollars.
Hmm.
So if you can't get a home at $350,000, you start lowering it to where the market wants it to be.
Yeah.
I think that there is just such an investment for property these days, and there's so much value attached for it. We might not see it immediately. It might
Hmm.
really come from those that are building the homes that are going to benefit from something like the Road Act.
That's what I was thinking too. Like
Yeah.
it seems like a lot of streamlining costs of things. And so,
Yeah.
the bigger companies who are building the homes are probably going to see those changes
Yeah.
well before they get to us. So hopefully at some point it does. I
Yeah.
guess I
I mean,
appreciate the effort, but
yeah, and I guess the other question that I would pose is with the rise of natural disasters that we're seeing, like kind of unheard of hurricanes, we're getting
mhm,
snow in Texas.
mhm,
Does less regulation on building materials lower the quality of homes
mm,
to withstand? And does that mean that it just means that more things are going to break, insurances are going to have to pay out of pocket
interesting.
more, or us as the home buyer going to have to kind of offset that cost and pay more to get our stuff fixed when insurance isn't ready to step in?
Now that is an interesting thought. It makes sense though, because I do think as a home buyer, maybe even as a renter, because the person that owns the home or company or whatever that owns the home may pass that price down. But even my parents will say, my parents will say, they don't build houses like they used to. Like, will we be saying that soon too? Because then the cost of materials is less. And that's a really good point that I
Right,
hadn't really even thought of, because you're right. We're getting some weather patterns and things that we have never seen. Like you mentioned,
right,
snow in Texas. I think it was snow in Florida, and those aren't
right,
things that happen, or even hurricanes further north.
right.
Um,
And you talk about like traditional building supplies for that area, right?
mhm.
If you're not prepared for colder weather, you get busted
Yeah.
pipes. Not to
Uh-huh.
say that like, somebody's building a better pipe, but there's just certain cultural things that happen within those
Mhm.
communities that are prepared for different kinds of weather that we're starting to see things shift around.
We'll be right back after a word from our sponsor.
Whether you're a longtime or first time listener to Behavioral Health Today, you're probably familiar with Triad, the company that brings you this podcast. But you may not know that Triad also hosts a community for current and aspiring behavioral and mental health professionals, featuring trending content and education and career resources, all for free. If you are a behavioral or mental health professional, or you're studying to become one, join more than 80,000 people on Triad by claiming your free professional account today. Visit us at hellotriad.com/BHT. That's hellotriad.com/BHT and join the Triad community today.
Right. Yeah, that will be interesting to see as things progress. And I know that's something that will unfold and we don't know how that will go, but I am curious to see that too, like what it will look like for homes in the South that aren't equipped for, the cold weather. And will builders be able to accommodate for that? Or, up north where you guys aren't used to extreme heat or hurricanes and things like that. Like you said, there are cultural things that I in the South understand that I must know and do when it's hurricane season. It really doesn't bother me any because I've
Right.
lived here forever. But someone from a different area may not be, accustomed to what you need to do if there is, water coming to your town. So it's interesting, and I'm interested to see how we are able to adjust to that in this country.
Yeah.
Interesting. So, if you know Maslow's hierarchy of need, housing sits like in that bottom foundational area, right? Right along with safety, warmth, predictability. When shelter stability is threatened, and we were actually just talking about this, the human nervous system enters this like state of chronic hypervigilance. You're just always waiting and always on go and ready for something to go wrong. When 40 or 50% of income goes strictly to rent or mortgage payments, families are forced to make trade offs on things like healthcare, prescriptions, food, savings. That level of prolonged financial stress elevates cortisol levels, directly contributing to, mental health concerns, things like clinical anxiety, depressive disorders, sleep disruption. Furthermore, surging home value assessments have driven up property insurance costs, another thing we were just talking about, right? So some homeowners are reducing the amount of coverage that they have or entirely dropping coverage just to be able to afford the bills. I even think in the state of North Carolina, they were saying the last couple of years, like homeowner insurance has almost doubled to account for things like the change in storms, the change in how much snow we're getting these days, and weather patterns that include things like hail, because roofs are now needing to be replaced much sooner than they were before, or even things on your car insurance because now your car is becoming more damaged. So it introduces this consistent level of dread or worry or waiting for the next thing, knowing that one severe storm or a pipe burst could cause this complete financial loss. And the strain of it isn't just for the adults in the situation. If you've got children, they're going to feel that too. So it really it just kind of changes how we need to live our lives, that I'm not sure that we have caught up with that need to change. So giving that, housing insecurity touches everything from your child's performance in school to marital conflict. Should we start treating housing access as, not just some kind of economic debate where we're just talking about it, but is it now a public mental health emergency?
Yeah. I mean, I wouldn't be, as extreme to say like it's a mental health emergency, but I do think that we have structures in place within our society and our communities to address housing, right?
Mhm.
We recognize that it is important for a person to feel housed and
Yeah.
safe,
Yep.
and we recognize that these are some of the fundamental needs as us as humans.
Mhm.
And so, when you talk about how housing can, affect the family, right? It can affect children and their nervous systems as they develop. It can affect relationships as it's linked to, domestic and relationship conflicts. I think that it is an important factor to consider within like a person's environment as it affects their mental health around all of this. So yeah, I think we see ripples, right? Even just the financial traumas that we go through within our generations of people.
Yeah.
And so, I think that we can think about this as addressing maybe like societal well-being of the
Mhm.
community.
Yeah.
Um, yeah, again, I wouldn't go as far as say that it's like a mental health emergency that we don't have
Mhm.
enough housing, but I certainly think that that is a factor that we consider. And we also see that element of environment being included in how we address mental health, right? We see some
Mhm.
of these programs like peer providers. There is a budget there that's flexible enough to address something like rent or rent control,
Gotcha.
right?
Yeah.
So we understand that these things are important, and we recognize how it affects a person's well-being. We are starting to see some adaption with maybe
Mhm.
like how flexible we can address some of these needs with where we spend the money.
Right. I completely agree with you. As I was writing this and thinking about it and doing my research, I'm like, yeah, emergency is probably a very strong word. But I mean, it's either you, when I've talked with people, it's either they're like, oh, there's nothing wrong with housing. It's fine. I'll just pay my rent, whatever. I'll just pay my mortgage. It's fine. It is what it is. Not even seeing that there's an issue. Or then people that are like, oh my God, this, sky's
Yes.
falling kind of thing. So it's not, I don't know if anybody is kind of in the middle of really looking at it from all of the sides. And like you mentioned it, I do think it becomes a health issue, housing
Yes.
itself, and in
Yes.
trying to ensure that providers are addressing or at least discussing, how housing affects their people. So I know in my current job and really the one before that, we'd really start to work on or discuss things like social determinants of health. And housing stability is one of those things that, goes into social determinants of health because I know I personally have patients right now that are having some housing instability. And yes, they are very sick. And yes, they know they need to come to get their dialysis, but they're thinking about where they're going to sleep.
Yeah.
So they may not come and take care of themselves physically because they're trying to figure out where, all of like regular life stuff, like
Yeah.
being healthy. Oh, that's great. I want to feel better. That's awesome. I really do. But then I need somewhere to sleep tonight too. So it provides a level of competition for people trying to live a better life. They're going to choose, let's think about how I can sleep or where my next housing or meal or whatever. Are my children going to be okay in school? I need to focus on that before I'm worried about making myself healthy. So I
Yeah.
agree.
Yeah. I think what you're listing is that these mental health problems that arise are symptoms of a larger systemic issue.
Yes, absolutely. Because it isn't just the housing. Housing
Right.
it does not exist in this silo. Because we all have to worry about housing to a certain extent, even those of us who may not have to worry about it, it's still there. We still must make the payments. We still must, do the things. It is a part of all of our lives. And if we don't address it in some way, at least to discuss it, I think that has implications negatively on people's health in general.
Yes.
Yeah. And so, honestly, the idea to discuss housing and all of this today really came from my personal experience. And you and I have been talking about this for months at this point, because my family recently bought a house a couple months ago, or maybe a month or so ago at this point. We bought a home again after being first time home buyers the first time in 2015. Sold that house, moved, here we are. And it really is a textbook example of how drastically the rules have kind of changed in that 10-year period or 11-year period from the first time we bought to now. We were gracious recipients of a lot of those policies and things that happened after the recession of 2008. So we bought this house, like I said, in 2015. It's our first house, brand new build. The whole neighborhood wasn't even finished. Okay. They were building across the street when we moved in. 2,000 square foot house, a suburban area. It was $150,000. At that time, we were like, oh, that's expensive. Now, unheard of. But anyway, so we had an FHA loan, 3.2% interest. It was lovely. Our monthly mortgage was comparable to rent for similar homes in our area. We had minimal savings, I'll be honest. We didn't have much. Modest credit scores. I mean, it was okay, but it really could have been better. But we had job longevity. So it made the process really straightforward. It was really easy. It did not take us very long to get approved for whatever we wanted, got approved for more than we had planned on spending. Really easy process. So we enjoyed it. It's pretty simple. Today, that house is worth nearly double what we paid, and it garners rent that is almost 3 times what we paid in mortgage. Okay. Looked on Zillow, so I was like, let me make sure I'm right. Um, because as I couldn't believe
Yeah.
just that jump. Now, that's not what we sold it for just 3 years ago, though. So it makes it even crazier that they made that change.
Yeah.
So fast forward to our recent home buying experience. Yes, we did move to a suburban area that is much closer or closer to a much larger city. We'll preface that. Our financial profile is dramatically stronger. Okay. We're going to beat to my own horn here. Like our credit scores are up over 100 points for, each myself and my husband. Had some savings. Like I said, we sold that house. But the contrast between the two situations, we're thinking, oh, we're in a great place, right? We're coming in, we got a little bit of money. Our credit scores are, really good. So like, this is going to be good. It's going to be easy. The first time we got approved for the loan in this process, it was 6%. For houses that were 10 to 15 years older, that cost $500,000. The same 2,000 square feet house, maybe, 25,
Wow.
10 or 15 years older. So same age of the house that we sold for $500,000. And so I had to pause there for a second because it was really like a smack in the face. And we sat back we took a break because the emotional toll that it took was like, wow, this is really what we're about to do. Okay. Okay. All right. And despite our stronger financial position, the approval process was grueling. So it really caused us to question our worth at times, which was kind of really conflicting with who we knew we were. We had saved money. We had, gotten the higher credit scores. We had done really hard work to get us here. And now you won't approve us for a home that we know that we can afford. Even though we don't want to pay this higher mortgage, we know we can't afford it. And talking about like marital strain and impact on children. I cannot tell you how many hours we spent going back and forth with our lender, with ourselves, spending time away that should have been for work, for
Mhm.
home, for, spending time with our friends, family. It was spent kind of digging back and forth about what do we do? Do we buy this? What do we do? Like, what is our next big step? And then on top of that, we were considered first time home buyers again because it had been so long, but the programs are kind of non-existent. And I don't know if it's because of the price point. I'm not sure if it's because of the regional market. We're kind of having to, put a bigger amount down on a house that is much older, knowing that you're going to need to spend some money to fix things. Maybe not today,
Right.
but things are going to happen that you need to fix. So, like I mentioned earlier, we were faced though with these yearly rent increases without benefits of flexibility, being able to change things. Then there's no equity. We own none of it, get nothing back. But, and I mean, I'm not talking about 50 to $100 increases. These are like $300 and $400 increases every year. So, of course, ultimately we did end up buying, but it almost felt like a lesser of two evils in making that choice. So, having kind of walked through these numbers, and I hadn't told you all the number parts before, but we had been talking about like how crazy I felt or how like it just was a lot. And,
Yeah.
hearing me talk about this for at this moment, probably 4 months or so, why do you think that modern mortgage underwriting, even for buyers like us with strong credit savings, why do you think it's so emotionally invasive and demoralizing today compared to what it was a decade ago?
Yeah. Yeah. Wow. Well, first off, I just want to say, like, having gone through maybe the first home buying experience and having to go through your second process, I can imagine how difficult and challenging that must have been because you're almost going through the same process,
Mhm.
but that you're treated entirely different.
Yes. Yeah.
And the experience of having to get something which you have, a little bit more experience with just owning a property in the past and having to
Mhm.
get something which, in the way you're describing, you guys you're like, well, it's not as great as the old house, but yet we're having to work, you know, twice, three times as hard, and
Yeah.
in an interest, it's just you're being valued less by
Mhm.
those that sort of control that system than
Yeah.
before.
Yeah.
And in my own research, I see the trend. So post 2008, it created a lot of regulatory reforms.
Mhm.
And because of those reforms, and because of technological advances, now since 2015, they've tightened regulations even more.
Yep.
So rather than a person being able to say, can you afford it? It's now created an extensive paper trail to protect the sellers
Yes.
from liability and
Yes.
making sure that they're protected through that, not necessarily a buyer, right? So
Right.
it's a seller's market in a sense that they're the ones that are being protected and not the buyer. And understanding a little bit more of the underwriting process, you're now put through a system where you're required to have a ton of paperwork
Mhm.
and you're being judged for your work, even though like you're saying, you're doing all the right things. And so the process has gotten more complicated and more scrupulative than it had been before. And
Mhm.
and I think that that's all kind of going into, where you're feeling like, boy, I'm not really quite getting treated the same way as I once was.
Yeah. Yeah.
The power is within the
Yes.
seller now. And
Right.
so I think that that kind of all goes into this change, making it feeling demoralizing.
Right. 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 And I don't want to paint like this completely negative picture because it's
Sure.
not a completely negative situation. Like we love
Right.
the house that we bought. We're happy with the purchase that we made. If we had not found something that, fit for all the boxes for us, we wouldn't have done it. But it really did at times feel very highly pressurized.
Yeah.
And it wasn't personal. It's not about me, but it felt personal. Like, wait a minute, you don't see how hard I work? Like, we worked
Right.
hard for this. Like, what do you mean you need more? Like, what more do you want?
Sure.
And so it really, as someone who has done it, it has been quite the interesting process. And probably I might not feel this way had we not bought a house before. So the
Sh-
people that I'm talking to now that are just buying homes, they're like, what do you mean it wasn't that bad? I'm like, because you didn't do this 10 years ago when it
Yeah.
was like, here's my social. What else you need? And they're like, take the house, it's yours. It's a much easier situation. And so maybe that knowledge here made it a bit more difficult for us. But the emotional toll is it definitely took, it took some things for us to make it something I'm proud of us, but it definitely was a process for sure.
So when you kind of like consider that experience and you think about all those that are sitting on homes that are not necessarily like pressured to sell, but they might be thinking about it. Do you feel like someone else going through that same process might experience, again, I'm not in your shoes, but I'm kind of feeling like maybe an imposter syndrome?
Yes. Yes, that is what it feels like. Like maybe I'm not good enough for this,
Yeah,
or maybe you're right, bank or lender or whoever, maybe you shouldn't give me this money because maybe I can't pay you.
right.
Like, so even though I've done it before and did fine,
Yeah,
maybe you're right. Maybe I shouldn't. Maybe this isn't for us. Maybe this is not it. Because it does kind of make you question, your worth to a certain extent. And like you said, it gives you this level of imposter syndrome. Like, yeah, you can do it, but maybe you don't think I can.
sure. And, I think that this is a lot of things built on top of each other, right?
Mhm.
A lot of automation. You're not dealing with humans as much. I think really the
Me
loss
too.
of humans,
Mhm.
a loss of human judgment in this
Yep.
process is making things feeling a little bit more dehumanized.
Well, that's a good point. I didn't even really think about the technological advances that happened in the last 11 years. And so I do believe that our lending situation before, like we were really talking to people, making these financial decisions. And the lenders in the underwriting companies were calling us directly to talk to us. Like there wasn't some machine and it was not all of that. And so you're right. It does give that level of, we had that personal interaction with a person before.
Right.
They
Right.
understood our worth because they talked to us.
Right.
I wasn't just a number.
Right, exactly. I mean, and I experienced this with just, my medical coverage and insurances.
Mm, mm,
I am not able to talk to a person unless I go through a million robots.
mhm.
I don't have somebody explaining to me these things. And so that distance of me having to go through a robot creates a very dehumanizing experience when I'm trying
Yeah.
to understand these numbers when it's really kind of calculated from a formula. Like
Yeah.
my insurance is not written by a human, my insurance is
Mm-mm.
written by a computer that's
Yeah.
trying to make the most amount of money for a corporation, right?
Mhm.
At any point in that, there's really not a person overlooking my numbers and saying
Right.
like, boy, they're going through a really tough time.
Yeah.
We might be able to figure out this bill a little bit differently. Now I know that
Right.
there's those options and they throw that out, right? But it still doesn't make the experience feel more personalized for me.
Right, right, and you're losing that human interaction because if you were on the phone with somebody, they'd be like, "Gosh, Peter's such a great guy. He's working hard. Let's see what we can do."
Right.
It loses that "let's see what we can do" factor
Right.
in again, not just housing, like you mentioned, not just housing, but with so many other things that technology has been inserted to. Again, not to say that it's a bad thing, but it
Right.
just changes the landscape of what a lot of us have become
Sure,
accustomed to.
right, right. Well, what we see is that from 2018 is that the system got safer and more
Mhm.
standardized,
True.
but nobody's accounting for what the standardization maybe impacts us psychologically. That's
Right.
that imposter syndrome, that
Yep.
lack of personalization.
Yeah. Yeah.
Yeah.
So it is, and I know that we can't solve all the world's problems in 40 minutes, but it brings
No,
about a lot of thoughts on the issue. And if there
that's
is one central takeaway from our conversation, I hope that it's a truth that we need to start recognizing far more often in both clinical settings and in, policy hallways and in governmental places, that housing policy is effectively health policy. The roof over our heads is far more than a financial equity or square footage. It is a direct foundation of our psychological safety, emotional regulation, and family stability. when that foundation is shaken by supply shortages, endless bureaucracy, unrelenting cost burdens, the human mind and body carry the physical toll. If you're currently navigating this market, whether you're feeling trapped in an escalating lease or exhausted by a grueling home buying process, or just lying awake at night worrying about the rising housing property costs or a rental cost, I want you to hear me when I say this. Give yourself some grace. The chronic stress, the hypervigilance, the burnout that you might be experiencing are not personal failings. It's not about you. You're not doing it wrong. And you're managing a normal human stress response to a deeply strained system. So thank you for joining us on this episode of BHT Bytes. We'll apologize for going a little longer today. We appreciate you for being a part of this community, and we'll see you next time on Behavioral Health Today.
We appreciate all the support from our community, and if you like our show, one of the best ways you can support it is by giving us a 5-star rating and leaving a review. Behavioral Health Today is a podcast part of the Tried Behavioral Health Network, all rights reserved.